Okay, guys. This is price action for today, the 14th of August, 2024. And I'm gonna kind of break down what I saw. I did not get into this trade, unfortunately. Bias was very much correct, went to the target and everything. Just no entry available um during my time, which is pre 9 o'clock. Sorry, pre 11 o'clock. Um, so no entry available, but there is an entry in there. So I kind of want to break it down on what I saw in terms of bias wise, in terms of understanding where I thought price was going to go for the day, which you can see is bullish. We spoke about this morning on the Zoom call for those who weren't there. Spoke about what we expected to see. So let me just go a little bit of a replay here. Yeah, let's just go to the high because this is kind of irrelevant. So let's kind of start from the daily. So what was I expecting? All right. Monday, we had an expansive day. Sorry, Monday. Well, Monday isn't really expansive. Monday, gave us a little bit of a push. Tuesday was a very much expansive day. Wednesday, today, I was expecting it to be another expansive day. So all in all, I'm looking long well, I wanted to look long today. That was kind of the thought process going into the day. And as you can see, the weekly target I have is up here, this high. Um, this is I think 2 weeks ago high. Yes. So that's going to be this high over here. And even if you look at it on the weekly, we have this massive rejection. It looks as though we're pushing to go higher, and I do think we're still going to reach for those highs um, into Thursday and Friday ultimately. But yeah, that's kind of the thought process. So I'm going into it with a daily bullish bias. Um, 4 hour. Was there anything on the 4 hour? No, nothing on the 4 hour of note really, except we have this first line of defense FVG. I did not really take that into account, so I'm not going to really use that at all. Now, on the hour chart, what is it that we're looking at? Right? We have CPI this morning. Um, CPI did some funny things. But at the same time, I'm still looking to go long. There actually were some short opportunities in there from CPI, but um, I let them go because I'm looking long. Um, so nothing really on the hour. On the 15 minutes where we can start to see some things, right? We have previous daily high here, right? So note that here as PDH, PDH, PDH gets taken with CPI. We take it again and then we push lower. And all of this gets a lot cleaner in the lower time frames. Is it visible on the 5 really? Yes and yeah, it's a little bit more visible. So let me kind of break it down in terms of what I'm seeing on the 5 minute. So shoot, let me not do that. Okay, so we come in, we sweep liquidity, all right? Sweep the previous daily high with CPI. What I'm looking at here with CPI is breakout traders. Firstly, not to say that I'm a breakout trader, but I'm thinking in terms of what retail is thinking. We have a high here, previous daily high. Breakout traders are going to have their buy stops above that, which we clearly come in, we tap, and then we push lower. Now, if I'm a breakout trader on the sell side, then I'm going to have my sell limit. Oops, hold on. I'm going to have my sell limits here. And look at that. just barely tapped us. So this is kind of like a seek and destroy profile where we're taking the lows, we're taking the highs, we're taking the lows, we're taking the highs. But I'm trying, not trying. I need to understand what it is that the market actually wants to do. And since the CPI is such a volatile time, I need to let the dust settle first. So seeing this, I see that we sweep the buy side first. We get buyers involved from those buy stops. Price pushes down lower. These guys get liquidated. We come down. They may have their stops down here. They may not. But what it does is it now gets sell-siders involved. Sell-siders sounds like a gang. We now get sell stop people involved because they're looking for breakouts. This technically would put their sell stops, tap into their sell stops. Then what do? Those sell stop people, they're going to put their high above here. Price comes up, wicks them out again. So now the people who are in shorts, they get liquidated. People who are in longs, they want to hop back in again because now this is the breakout. And then they get smoked. And price runs on down, taking out all of these equal lows, and then looks to push higher. So the whole time in here, this is what I'm thinking. And when we come lower into this lower price action, and this is, I think, where I made a slight mistake. Not mistake, that's not the right word. It's where I should have maybe looked on a different time frame, and been a little bit more aggressive in terms of getting in. So I'm looking at it in terms of we need some form of a change of state of delivery, some form of an ISP failure, some form of some reversal pattern for me to look to get in. On the 5 minute, we don't have that. We do have an SMV from here at this point. That's really what I was looking at. We also have a change of state of delivery on the 1 minute, on the 5 minute. So I was like, okay, cool. Once we came above here, I'm like, all right, we're bullish. And I looked at the 1 minute in order to take the entry, which was like this. We have this low in here, this FEG now on the 1 minute. We have this low, which should be protected. I actually put it a little bit lower to cover the entire FEG, just in case price wanted to come out and create a new type 1 to go higher. And then my target was the standard deviations of, standard deviations of this push here. Just a 5 minute push, target the 2 standard deviations like so. And that's essentially my trade idea. That's how I was looking to take it. Now, as you can see, this is not an actual, this didn't work out. This isn't a trade that worked out for me. Bias and everything was correct, just didn't work out. So how could I have been on side in this particular trade idea? I actually saw it on the 2 minute, and I was a little late to the party here. Because I really wanted to wait for those confirmations on the 5. Even on the 1 minute, I'm gonna go back to the 1 minute. On the 1 minute, technically it works too, but it's just not. It would be a little risky for me to take that in terms of I know that this is my structural point here to my low. Taking an inverse FEG like this is, in my opinion, is a little risky. But on the 2 minute, it's very clear where we have this inverse FEG. All right, which is very clearly the last push down. We clearly push right above it. We tap right in. That would have been my entry. Stop below. This would have been how we would have done it. Stop below this point. Why this point? This is the last point of liquidity, and price. Once price suits the liquidity, it very rarely goes below the point that was swept. And target, the same thing. Target would have been the 2 or the 4 standard deviations. In this particular case, the R was 9.4, so I wouldn't even bother take it to the other one. The 4 standard deviations. I don't go above 10R ever. So yeah. Yeah, that was the thought process going into it. It's just the last little bit, the last executions part. Um, the executions part is what let me down today. But bias building and everything, everything else was spot on, and I'm actually pretty proud of myself for it. If I'm being honest with you. Yeah, and then that essentially would be the trade like this, and yeah, I think took off, man. But yeah, when we were in here, let's talk about sell side potential sell sides. All right. This is something else we were talking about in the Zoom call was trading what you see and not what you think you see. So what do we see? On the 1 minute, we have equal highs, very clear liquidity, a very clear push up to sweep liquidity, a very clear push down with a change in state of delivery. This is very simply an entry right here off the breaker block, covering the breaker block. Target, this target would be the 4 standard deviations or the -2. As you can see, we didn't quite reach the 4 standard deviations. Wait, why is that different? That's not, oh, this is too high, that's why. There you go. All right. Yeah, there we go. Cool. So as you can see, this doesn't quite tap the 4 standard deviations. So the opportunity here would have been 50% at the 3, sorry, at the 2 standard deviations. And then I would have been break even and probably tapped out break even here. That's fine. But that would have been the first entry. If you didn't want to take that because you thought it was a little risky, there was a second entry in here, which is the one that I was Gas and I saw, which is this would this should be your protected high. Should doesn't have to be your protected high, but you would have done it in terms of first line of defense. So this would have been your first trade, push down, only FEG available. This one, you'd have taken that. Same kind of thing. But again, didn't take it because I'm looking long this morning. I was not looking for any shorts. 2 standard deviations, that's 2.3 R, and ultimately we wouldn't have made it down to the 4. But yeah, that's kind of how we set up for the day. And all this was a waiting game until I got something that told me, yeah, we wanna reverse to go higher, which was the original objective. Where I mean, now you can clearly see we have equals here. Price comes in, taps out those equals, and now just rips up higher. And so what I expect for tomorrow, Thursday, same thing, bullish price action. I expect us to go higher. But we'll see what it looks like in the morning. Haven't taken a trade this week yet, unfortunately. I wish I could have gotten in today. Got in on side today. But sometimes that happens. So yeah, guys, that was kind of a breakdown of today's PA. And see y'all tomorrow.